Just enjoy and listen to, and have a fun of it.
Your story radio station onga.
And hello, everyone. Today, we are really diving deep into, well, a pretty exciting space where artificial intelligence is shaking up how we manage money. Yeah, we're talking wealth tech, and specifically, we're looking at a company making serious waves in Asia, AQUMON, using them as a sort of case study.
Exactly. It's a fascinating intersection.
So if you want the inside track on how AI and finance are coming together, you are definitely in the right place. But just before we jump in, a quick favor. If you like what we're doing, please hit that subscribe button, maybe give us a thumbs up, and turn on your notifications. That way you won't miss any of these deep dives.
Good call. Okay, so AI. It's changing almost everything, right? But finance, especially investing, sometimes feels like it's lagging behind. A bit traditional, maybe.
Yeah, it does seem slower sometimes. So we got curious about, what the future might actually look like for your investments. And AQUMON, based out of Hong Kong, seems to be offering one of the clearest glimpses, certainly in Asia.
They really are.
So maybe let's just define our terms first. What exactly is wealth tech? And, how does a company like AQUMON fit into that picture?
Okay, wealth tech is pretty straightforward, actually. It's financial technology, fintech, but applied specifically to managing wealth. So think sophisticated software, algorithms, big data, all used to give investment advice and services. AQUMON fits in as what's often called a robo-advisor.
Robo-advisor. Okay, sounds a bit like something out of science fiction, robots handling your cash. But what does that actually mean in practice?
Yeah, less sci-fi, more automation. It's essentially an automated investment platform driven by algorithms. So our mission today, we want to unpack how AQUMON is using this automated approach, especially coming out of that really competitive Hong Kong market, to, get some pretty impressive results and change how regular people like you can access quite sophisticated investment strategies.
Okay, let's unpack it then. Every story starts somewhere. Where did AQUMON come from? I mean, this isn't just some random tech startup, is it?
No, far from it. AQUMON was actually developed by a company called Magnum Research Limited, and it was incubated right out of the Hong Kong University of Science and Technology, HKUS. So very strong academic and fintech roots there in Hong Kong.
HKUS, okay.
Yeah. Their core thing is automated asset allocation. They use their own proprietary quantitative or quant algorithms, plus some advanced machine learning.
Right, quant. So number crunching, basically.
Yeah.
But when you hear AI managing money, I think a lot of people immediately feel a bit skeptical. Like, is it just a black box algorithm making trades? Is there any human involved?
That's a really common question, and it actually points to one of their key strengths.
Yep.
They use a hybrid model.
Hybrid.
Yeah, it's not just the machine. They blend the AI's power with the essential insights from human experts, things like broad macroeconomic views, the bigger picture stuff, that gets fed into the algorithm.
Okay, so that's the text efficiency combined with, human context and wisdom.
Exactly. It's the best of both worlds, and that blend is absolutely vital for building trust, especially in finance.
Which brings us to regulation. Trust is everything in money, right? But Hong Kong is a really tightly regulated place. How does a tech firm like AQUMON convince those huge established financial institutions to actually partner up? Seems like a tough sell.
It does, but their credibility built on compliance is probably their biggest strategic advantage, their moat, if you will. See, a lot of fintechs might try to get by with the bare minimum regulation. AQUMON didn't do that. They went all in.
All in how?
They hold all three of the really critical licenses from Hong Kong's regulator, the Securities and Futures Commission, the SFC.
3 licenses? That sounds complicated. Why all 3? How does that help them?
It seems like overkill, but it's the difference, really, between just being a vendor selling software and being a deeply trusted partner. They've got Type 1 for securities trading, Type 4 for advising on securities, and Type 9 for asset management.
Okay, trading, advising, managing. Got it.
Holding all 3 basically gives them the legal green light for pretty much all the key activities, whether dealing with individual clients or big institutions. And for those big banks or insurance companies, that comprehensive compliance, it's non-negotiable. They simply can't afford the risk of partnering with someone who isn't buttoned up regulation-wise. It's AQUMON's badge of trust.
Okay, that makes sense. So that foundation of trust lets them run this strategic dual structure you mentioned earlier. And this is where their business model gets really interesting, because it's not just about selling directly to investors like us.
Precisely. They attack the market from 2 angles. First, there's the B2C side, business to consumer. That targets retail investors, yeah, like you and me.
Right.
They offer access to global investments, things like popular ETFs from big names, BlackRock, ARK Invest, plus direct stock trading in Hong Kong, the US, and even mainland China through the Stock Connect program.
And I noticed they really push customization too. Those themed portfolios looked interesting strategies focused on specific trends like tech or green energy.
Yeah, they've leaned into that, and it seems to be paying off. They mentioned that in 2024, more than 5 of those themed portfolios actually delivered double-digit annual returns.
Wow, okay. That's pretty compelling for someone managing their own money.
Definitely. That kind of targeted automated performance is attractive.
But maybe the biggest thing they seem to be doing is bridging traditional finance and, well, the new digital world. I heard they made a significant move into crypto.
They absolutely did. They launched something called Smart Global C 2.0. And this was a pretty big D, actually,
Why is that?
because it was the first platform in Asia to integrate regulated spot Bitcoin and Ethereum ETFs directly into a global asset allocation service. And crucially, they did it through regulated channels.
Ah, so taking crypto, which is notoriously volatile, and putting it within a regulated, stable framework.
Exactly. Offering exposure, but responsibly. It's quite innovative.
That is a big step for making these assets more accessible. Okay, let's switch gears to the other side of their structure. The B2B and B2B2C part. The infrastructure play.
Right. This is, I think, where their strategy gets really clever from an operational standpoint. Here, AQUMON acts as the technology engine for traditional financial players. They help these older firms digitize their wealth management services much faster than they could on their own.
So they go to a bank and say, hey, want a cutting-edge robo-advisor platform, we'll build and run it for you.
Essentially, yes. They provide the infrastructure.
So who's actually using this tech? Are we talking big players? What's the scale here?
Oh, yeah. Major institutions. They work with over 70 of them across Asia Pacific. Think names like CMB, Wing Lung Bank, AIA Hong Kong, Bank of China International. Really significant financial houses.
70. Wow. So what's the advantage of having that many big partners? Why go B2B like that?
2 key things: scale and cost efficiency. Through this huge network of partners, AQUMON's technology is actually serving over 10 million end users.
10 million.
Yeah. And strategically, this B2B2C distribution gives them a massive leg up on competitors. Their customer acquisition cost, the C, is much, much lower because they're leveraging the existing customer base and trust of these established banks and insurers rather than spending millions on direct consumer marketing trying to build that trust from scratch.
Smart. Leverage the partner's brands and reach. Okay, this sets the stage perfectly for the next part. 10-second pause.
Good evening, and welcome to the Story Radio Station, where we explore tales from around the world.
Okay, so jumping back in the first half, we established how AQUMON built this really strong foundation in Hong Kong, leveraging a strict regulation and that clever dual B2C and B2B2C model. But, for any investment platform, the proof is ultimately in the pudding. Performance. Let's get into the numbers.
Yeah, let's talk about that AI brain-driving things. You mentioned it uses a quantum mental philosophy. Sounds a bit like jargon. Can you break that down simply?
Yeah, it does sound a bit academic, but really it just means they combine 2 things. The hard logic of quantitative models, pure math, data analysis with the bigger picture, fundamental insights that human market experts provide.
So data crunching meets human context.
Pretty much. It's about synthesizing the technical signals with human foresight about where markets might be heading.
Okay, so how do we actually know if those AI decisions are any good? Especially when managing risk is so critical in investing.
Yeah.
How do you measure that quality?
Well, the key metric here is something called the Sharpe ratio. Are you familiar with it?
Vaguely. It measures return compared to the risk taken, right? So higher is better.
Exactly. It tells you how much excess return you're getting for each unit of risk you take on.
Yeah.
So yeah, a higher Sharpe ratio basically means better risk-adjusted performance. It shows you're getting good returns without just gambling more, shows stability.
Right. So the big question, what kind of Sharpe ratio did AQUMON's main portfolios achieve in 2024?
According to their data, the average Sharpe ratio for their flagship portfolios hit 1.56.
1.56? Is that good?
Oh, it's very good. To give you some context, anything consistently above 1.0 is generally considered strong performance relative to risk. So 1.56 indicates remarkably high and stable performance. It really helps validate their claim that their algorithms can outperform many traditional approaches on a risk-adjusted basis.
Okay, 1.56. That's a hard number people can point to. And that kind of performance at technical proof must attract serious investment into the company itself, right? I remember hearing about a big funding round a few years back.
You're right. They had a landmark round in 2020. AQUMON raised $30 million in strategic funding. And notably, that was the largest funding round for any digital asset management company in Asia that whole year.
30 million, wow. Who backed them?
Key investors include the Alibaba Hong Kong Entrepreneurs Fund. They've actually invested multiple times, showing continued confidence. Having backers like Alibaba adds a lot of credibility, too.
Absolutely. So what did that cash injection allow them to do? What was the impact?
It fueled massive growth, even during a period of, pretty significant economic uncertainty globally. They reported over 300% growth across all their key metrics. Think app downloads, new accounts being opened, the amount of money flowing into their funds.
300% growth, even then.
Yeah. It suggests the market really saw their combination of strong regulation and high-performance tech as a reliable, forward-looking choice.
Oh, so if we connect this performance back to the bigger picture, the rise of companies like AQUMON seems to be fundamentally about making sophisticated finance more, well, democratic, right? Taking tools previously only available if you were super rich and putting them in an app.
That's really the heart of the market shift they represent. They're taking strategies that used to require hiring an expensive private banker, something only accessible to high net worth individuals, H&Ws, and making them available digitally.
And who are they targeting mainly? Not just the super rich then?
No, their primary focus is what's called the mass affluent segment. So people with liquid assets roughly between, say, $50,000 and $1 million.
Okay, that's a pretty broad group.
It is, and the scale here is huge. One analysis showed that in Hong Kong, something like 94.4% of the wealthy population actually falls into that specific mass affluent bracket. So they're targeting the vast majority, the segment that was historically underserved by high-end advisors.
Right, the people who have some money to invest, but maybe not enough to get that personalized private banking treatment. That really could change the game for a lot of people.
What?
So looking forward, what's next? How does AQUMON plan to stay ahead in this fast-moving wealth tech space?
Well, one major push is deeper into hyper-personalization. We're moving way beyond the old static, one-size-fits-all portfolio advice.
Also,
AQUMON is talking about co-creation advisory. The idea is the AI doesn't just set a portfolio and forget it. It dynamically adjusts based on really complex changing factors specific to you.
like what kind of factors?
Things like your specific ESG preferences, environmental, social, governance investing, or maybe sudden life changes like having a child or retiring, or even just shifts in your personal tolerance for risk day to day. The AI adapts in near real time.
So the algorithm becomes like a super attentive personal advisor, adjusting constantly to things a human might only review quarterly.
That's the goal. And the other big frontier they're exploring is generative AI or Gen AI.
Okay, like ChatGPT, but for finance.
Sort of. While their core quant engine is already doing the heavy lifting on investments, they see Gen AI as a way to streamline a lot of the complex client-facing stuff. Think making the whole onboarding process smoother, faster, more intuitive. And also developing even more sophisticated ways to explain advice or generate reports for clients and their institutional partners. Big efficiency gains there.
Makes sense. And the overall market growth suggests they're betting on the right trends.
Absolutely. Projections show the Asia-Pacific wealth tech market could grow, get this, 3 to 4 times its current size by 2027. That's a compound annual growth rate somewhere between 25 and 30%.
Wow, massive growth.
Huge. And AQUMON's focus on expanding across the Greater Bay Area in China puts them right in the heart of that expected boom.
This has been really fascinating. So if we had to boil it down, what's the ultimate takeaway for listeners from AQUMON's story?
I think it shows a powerful, repeatable recipe for success in modern finance. It combines 3 key things. 1, deep commitment to regulation. Getting those 3 SFC licenses wasn't easy, but it built foundational trust. 2, provably superior technology. That 1.56 Sharpe ratio isn't just marketing fluff, it's hard evidence.
Right.
And 3, a really smart distribution model leveraging those 70-plus institutional partners gives them incredible reach to over 10 million potential clients and does it cost effectively.
And you have to mention how they're pushing the envelope by integrating traditional assets with new digital ones, like those regulated crypto ETFs. It shows how wealth tech can bring new asset classes into the mainstream.